everyone, my name is Swasti and today I'm going to talk about how college students can actually start investing their money. And there's more than one reason on why you should actually start today and start early. So let's get into it. So let's say you invested $1,000 in the stock market when you were 20, right? If you got, say, 15% gains a year and you were to reinvest these gains again to investments, you would have made $66,000 by the time you turn 50. Okay, so I know it sounds a little bit crazy, but trust me, 15% is not a lot, right? So let's just take a look at a share like Apple, for example, that we're all familiar with, right? Apple was selling for about 100 USD in 2016, right? As of today, October 2018, it is selling at 222 USD per share, right? That is literally more than twice your return, guys. Like, that is a lot. Okay, that is more than 15%. So if you were to start early, you have the advantage of time, which is something most people don't actually have when they start in their 30s or 40s or even 50s, for example. So with that being said, okay, let's get into the video. So how do you actually start investing your actual money? So the first and the most important thing you need to do to invest is to actually invest in yourself. As cliche as that sounds, it's actually very true. If you start early, you also have, the time of making mistakes and learning from it, which most of us will do in the stock market. Trust me, no matter how much you studied or you researched, you are bound to make mistakes. So how do you start investing in yourself, right? One of the best ways is actually look at YouTube videos, is to read from websites, from blogs, attend seminars, and even read books. So yes, out of all of this, I would actually recommend reading books because it goes into details, and most of the time in seminars or videos we actually have time constraints, so you won't be able to see the entire big picture or read every different parts of it. So some of the examples of the book that I personally own are books like The Intelligent Investor, which is a good book. It's actually by Benjamin Graham, which is the master of Warren Buffett, the master or the guru, teacher, etc. So he does go into a lot of details. As you can see, it's a really thick book. So yeah, that, or even books like One Up on Wall Street by Peter Lynch. It's also a good book. It's a lot simpler than The Intelligent Investor. So yeah, these are books that you can take a look at. I'll link it down below. If you're interested, just click on the link. Let's move on. Okay, so number 2, the second thing that you need to do is to actually open your own brokerage account. Because how are you going to invest in, say, stocks or even ETFs if you don't have your own brokerage account, right? So there are quite a lot of online brokerage accounts that you could play around with, like TD Ameritrade, right? In this, you can even open a paper trading account where you can try out with just like fake money in a way, so you won't be losing any actual cash. It's a great way to get started. Or there's things like Fidelity, right? Personally, for me, my brokerage account is in Poems 2.0, right? So I live in Singapore, so that's actually a Singapore brokerage account, and yeah, it allows me to trade as a student, so that's pretty hard to find actually. Okay, so now that you have your brokerage account, right, the next thing to do is to make sure that you settle your debts first. Right? You don't understand how many friends I have that want to get into investing when they have like $20,000, $30,000 college loans. The thing is, investing actually comes with a risk, right? Say you were to invest $10,000 into a stock or a company. There's a chance that you might lose literally every cent of it, right? Obviously, it's not very common, but right, there is a risk involved. So if you're already on debt, you don't want to get into more debt. You want to settle your loans first, settle your debts first, make sure you're financially alright to start investing that money. Right. So now that we have covered all of that, it's time to actually invest your money. Okay, so the first way is mutual funds. This isn't something that I personally did because the investment returns are really low. And the reason for that is because there's high cost that you're actually paying for the investors. So what mutual funds actually are is that you are paying an investor to invest the money for you. So they have this pool of funds and they get money from all of these different people, and they invest it together in, say, some big stocks. So another thing that you can invest in is the exchange traded funds, ETFs. So what these ETFs try to do is they try to replicate the index funds. So they try to replicate the market, like how the economy is moving or whatsoever. Okay, so for example, the S&P 500 is an index fund, right? So you can invest in an ETF that follows this index fund, for example, the Vanguard 500, and you'll roughly move around the same as S&P 500. So your gains and your return moves along with the market. Okay, so let's go to my favorite, which is the stock market. So this is what I started investing in 2 years ago. There's so many things to actually consider before buying a stock. So look at buying a stock as buying a business, right? Would you buy this business or would you invest in this business? There's so many factors to look at, right? Number one is the numbers. Like you need to look at the PE ratio, the balance sheet, read the income statements and things like that. See whether they have free cash flow, whether they are making money, are they a profitable company, right? There are also other factors. Say you have to look at the management, right? Like, would you trust a business that doesn't have a proper CEO or a good management? So buying a stock is actually one of the best ways you can achieve gains like 15%, 20% or even 30% a year, right? But you have to understand that buying stock does come with risk, right? There are less risky stocks, but at the end of the day, almost every single stock that you could buy comes with risk. So that is why it's actually important to research and understand the business well before you invest in any stock. Okay, so with that, you're ready to start investing, but investing in yourself first. So good luck, guys. If you want to know in more detail on how to find stocks or how to read companies or the annual report, do let me know and I'll probably try to make a different video about it. So if you like that, do hit the like button below, comment down what you think or what else I should do a video about, and don't forget to subscribe. So I'll see you next time.